You're spinning on her head. All right, so today I got a nice little gem for you guys, and I want you to kind of put it as a little thing that you always have in mind, right? So just like I normally will mention, the market will will have trends, right? So just like the fidget spinner, just like when the fidget spinner was the most hyped thing. It went from being some change to like $30 for a fidget spinner. And then that hype went away, right? So there's times where a sector or something specific is the main focus, right? So at one point we had Nvidia, it was doing amazing, right? AI, everything. Every company wanted to add or include AI some way, somehow, right? If it was replacing their employees, if it was adding a service, but including AI, some way, somehow they're trying to incorporate AI, right? So as we trade, as we invest, as we put our money into the market, we must think like an investor, right? So if Netflix raises their subscription $1 and I own parts or shares of Netflix, for me, that's a win. As an investor, that's a win. That means the company is increasing how much they're charging. So that's more inflow or cash into the company, right? So as an investor, I know that I want them to find other streams or forms of money, right? If it's a new service, if it is a new product, if it's maybe cutting costs from something that they already have, I want them to be able to find a way or be able to adjust to whatever market it is, right? We've had COVID, we've had after COVID, right? The craziness, right? I want a company that will be able to survive, even if I know that something crazy may happen or can happen, and it can still get back to that point or even go past where it is at that moment, right? So, something I would recommend, do this, right? Look back at all the companies after COVID, during COVID, that are still around, still surviving. A lot of companies went bankrupt, child filed for Chapter 7 bankruptcy, right? So look and see which companies and where they have gone from when they went down. China stocks. You guys know I mention this probably every week at this point now. The China stocks. The last time Trump was in office, a stock like Alibaba, for example, went from $80 to $300. So, me knowing this information, what do we see now? Right? We see a lot of movement in the China stocks. We see a lot of, if you look at the week chart, if you look at the month, the daily, we see a lot of movement or upside bullish movement in the China sector. If we look at the year to date, they're doing beautifully. When the rest of the market is going down, we see the China stocks going up, right? Certain things that may affect an American or US stock, like Nvidia, Apple, Google, right? T-Mobile, Verizon, whatever the company is, depending on where they're located, can affect the stock as well. So there's times where we'll get some news that comes out. Most of the market is down, right? But there will be times where the China stocks, they're not worried about that news, whatever it is. They're still on a nice uptrend or still bullish. So start to kind of recognize or point out things that you see each day in the market. So let's say we had a crazy red day, for example, like Friday. Look and see what stocks did well. Look and see, of course, what stocks did bad. But you want to understand what stocks did well. Why didn't this stock go down like the rest? What made this stock different from the others that weren't being affected in the market, right? So we all know SPY is a 500 companies clustered into one, right? So just knowing what companies are in SPY and which ones hold a larger weight into that ETF, you understand what can affect the market more. At one point, Nvidia was the main focus, right? So when Nvidia was going up, most of the market was going up. It's almost like a domino effect. If Nvidia is going down, most of the market at some point was going down as well. Same concept. It's almost like a domino effect. We have Nvidia with earnings coming this week. At this point, it can really make or break the chip sector as a whole, right? We have AMD, we have ARM, we have companies that also kind of work with these chip companies, right? We have SMCI, we have KLAC, right? So we have different stocks that work with these chip sectors, these chip companies. So a lot of eyes will be on Nvidia and those other chip companies. Remember the stock of the year, AVGO, right? Broadcom. With Nvidia having earnings, yes, it can affect Broadcom. So if you got longs in AVGO, you can cut them before earnings happens, wait it out, or kind of trade a little less if you don't want to risk it. But understand what happens in the market can affect different sectors. Okay, something like maybe the China stocks may not be as affected if Nvidia, for example, does have bad earnings or good earnings. Any questions, guys? Any questions? Does it make sense?
Yeah, I heard you, brother.
Anyone else? Anyone else? Anyone else?
Yeah.
We got like what, 14 people on here.
Yeah, we get it.
Okay, good.
Yeah.
So we have to think as an investor. So if Netflix raises their subscription, $1, $10, $20, whatever the amount is, that company wants to make more money. They're trying to adjust. Maybe they're working on a new project. Maybe they're working on something else. They don't even have to give an additional service. Raise the subscription $1. People will pay. Existing people will continue to pay. New people will pay, right? Most people, if they're not familiar with the market, their first response, if I ask, hey, if Netflix raises their subscription $1, it's going to go down. People don't want to spend $1 more. I promise, they don't mind $1 more. Us as consumers, us as investors, we don't mind $1 more, right? That's more inflow of cash. That could be maybe more cash on hand for the company. So understanding what news affects a stock or a company will be very key important. Knowing what company can also affect whatever stock you're in is going to be very key and important as you trade more, as you get adjusted into the market. The market changes. You have to know that the market changes. You have to know how to be able to adjust to the market. You may not know right away, but you have to understand that you have to adapt to the market. Maybe you have a specific strategy, right? A specific setup. Until 1, 2, 3, 4, 5, when your checklist works out or plays out, you don't enter, right? So you should have a specific setup that you're looking for anytime that you're going to jump into a trade. Maybe it's based off of news. Maybe it's based off of technicals, right? Fundamentals, technicals, they kind of go hand in hand also. You work with them both. For me, I'm more for news. I love my news upgrades. A company gets upgraded, company gets downgraded, company has a new service or partnership. I'm looking for some upside, right? Technicals is key to also having those entries, the exits, and understanding if you're going to stay longer in a trade. There's different aspects of the market that you have to understand, right? We have economics. Those reports that I post each morning, each week, right, in the economic calendar, that's so that you know who's speaking. What reports can come out at 9:30, 8:30, 10 o'clock, not 9:30, excuse me, 8:30, 10 o'clock, 11 o'clock, 2, 2:30. Those are times that you'll see shifts in the market. because maybe a report came out, maybe someone's speaking. Knowing that is important, right? If you're in a trade, if you're heavy in a trade, right, and you see something playing out, the moment some news comes out, it can change the whole direction. We've seen it plenty of times over and over. Market on a nice uptrend or a nice downtrend, some news comes out, it kind of gets shaky, kind of goes up and down a little bit, and then chooses a direction. So knowing what news is going to come out and how it can affect the market is going to be important. Each day, each week, understand what news is going to come out so that you can trade accordingly. Have a plan when you're trading, when you're jumping into a trade. Don't just jump in just because. We know you're trying to make money. We're all trying to make money in the market. But you have to understand it is a business. Know your risks. Know what can make you money. Know what your best assets are for trading, right? If you know you're better with news, you know you're better with technicals. Understand what your weakness is so you can work on those more. Any questions, guys?
No,
No.
makes sense.
Knowing y'all, I know y'all just y'all will let me talk for hours if y'all wanted me to. If y'all was up. If there's anything specific you want me to go over, just let me know. I'm just going
Understanding the
over.
RSI.
So the relative strength index, that is fun. I'll go over one indicator for y'all. That's my favorite. So remember this, right? Each indicator, I want to say, is a laggard. What does a laggard mean? So that means as the move is occurring or happening, you'll see that indicator start to play out. So let's say you see a reversal, an uptrend start to occur or a downtrend. That's where your indicator starts to point out, your RSI, your Bollinger Bands. So always remember, your indicators, most indicators are going to be laggers. So that means the move is already occurring as it points it out. So here's an example. Let's see, right? So I'll choose another stock. What stock do you want? Choose our Tesla every week.
The AVGO one.
Hey, stock of the year, AVGO.
Playing AVGO.
Don't worry, I know what you're saying. No worries. All right. Anytime I see red, all I see is opportunity. Especially a company like AVGO, Nvidia, Google, Apple. These companies have been around for a while, and I don't see them going anywhere. They adjust to what the market is giving. Right. AVGO, since I've said it, I know you guys have seen us make money in it, and some of you guys have played it on your own, right? So plenty of opportunity. Here's the RSI, right? At the very bottom. The purple line moves just like the stock at the top, right? So as the purple line at the bottom is going up or trending up, it's bullish. Same thing with the stock, bullish, right? Something I want to point out, certain things you want to know, no matter what you want to know. Dojis, what is a doji candle? You see this candle right here? Kind of looks like a T, but the line in the middle is in the middle of it, right?
Mm-hmm.
This is a doji. That's a very important candle. This signifies a possible reversal. So let's say if we're on a nice uptrend, right? We got nice big body green candles back to back, no wicks at the bottom, looking beautiful. So we're on a nice uptrend. You see that wick as candles start to get smaller, that means price is starting to change. That means the buyers are starting to lose control. When we see that wick, think of it like tug of war. The buyers and the sellers are trying to decide who's going to win on that candle. In this case, what did we see? A downtrend, right? A crazy downtrend, continued down, right? So this candle right here points out a possible reversal. Now remember, just because we see a doji doesn't mean it's going to reverse. It's a possible reversal. In this case, the sellers won that that sellers won in this case, right? Let me find another doji, but with an uptrend, a continuation, right? Over here, we get a few dojis, one right here, almost four right here. Here's a red doji, right? And another green one as well, right? Now, these green ones still tug of war, but the buyers still kept control. We get nice, bigger green candles, right? Whenever you see a big candle, if it's on puts, let's say if you have puts and you see the candle like this, or if you're on calls and you see a candle like this, or even these right here, you should be selling into this price action right here. The reason why, when you look at your contract prices, as you see these big candles, normally depending on your strike price, of course, you'll see price increase much quicker during times like this. When you're sitting in a trade like this, sideways, price is kind of fluctuating, kind of going up, kind of going down, mostly going down, right? But when you're sitting in your contracts and you have the larger candles, that's where you'll see more gains on your trades. That's where you'll see that change in price much more quicker. That's what options are about, right? Seeing more upside in a short period of time. These little small candles don't do anything, right? But these, we see a big change. Just like if we're in a trade, it's going up and then we see a big red candle, we see our percentage decrease quickly. But in this case, we love these green candles. That is when our contracts are increasing the most. The moment that we start sitting in a trade and it's trading sideways, we're starting to lose money. Of course, time decay. So it does depend on your expiration. So if you have, let's say you work a day job, right? You work when the market is open. You can't stare at the market all day. So you put trades that are 3 months out, 4 months out, a month out, 2 months out, a year out, 6 months out. Much easier to trade with those longer term trades, but you have to have patience because you don't have to worry about time decay. Let's say the first week, the trade doesn't work out. You still have time. Maybe you entered the trade too early, right? So just understanding how much time you have though. You don't want to wait. Hey, let me go ahead and get a leap a year from now, a year and a month from now, and then wait until the last month to decide, hey, let me kind of start deciding what I'm doing. Watch price. If you guys are up 20, 30, 40, 50, 100%, take your profits. A lot of times you'll see 20, 30, 40, 50, and then minus 40%. Don't be afraid to sell your contracts. A lot of us fall in love with the trade, fall in love with the contract, right? We see the gains, we're like, ooh, I can stay in the trade because it's going up, right? The moment it starts reversing, you kind of start forgetting about your trading plan or where price is going or where you wanted price to go. Hey, I wanted to get to 205. It's at 206 now. All right, now it's kind of going down. It's at 203. Should I stay back in until it gets to 205? If you're up, take your money. On to the next. On to the next trade you're more confident on.
Where?
Right? Does that make sense, guys? Does that make sense?
Yes, sir.
Everyone knows. Everyone knows.
Yeah,
Profit, take profit. Heard you.
absolutely.
See profit, take profit. Right? I say
Yeah.
it for a reason over and over and over.
Swear to God.
Plenty of times you see profit and we don't take profit, right? We'll look at it, be like, damn, I'm up. But think, dang, I could be up more. Right? Then we forget to look at the charts. Then we forget to actually look and see, hey, should I really be in this trade longer? I see green. I'm seeing all green on my charts right now. But should I be staying in this trade longer? Right? I set a target. I'm looking for that target to hit. It doesn't always hit, right, guys? It's not always going to hit that target. It could fall. I've seen it where it fell 2 pennies short. Does that mean I stay until it gets to that target? Let me take my profits. I'm a penny short from where I expected price to go. Right? Don't fall in love with the trade. Don't hold on to it to the point where, dang, I got to sell this now. It's red now. Let me just hold on to it. Take your money on to the next more confident trade. So remember, I said the China stocks, right? The last time Trump was in office, the China stocks, for example, Alibaba went from 80 to 300. Use this information however you would like. But what do we see? What do we notice now in the market? For the China stocks, just like the DeepSeek AI that came out, right? Changed the whole market. Whole market was in frenzy. I think it was less than 2,000 employees and less than $6 million needed to make an AI, they said, right? While we have other companies spending billions to make ChatGPT and different things, millions, right? That was why the market kind of went crazy. They were able to find something overseas in China that was more cost effective and worked basically the same or a little bit better. That was the whole frenzy, right? So just understanding what's going in the market will make it easier for you to be able to make your trades, decide what you're going into, decide how or what stocks are going to be affected from that news. Choose 2 stocks. You could choose 3, of course. Choose 2 stocks, 2 main stocks. You can always focus on. You always know if it's on an uptrend, if it's on a downtrend. What was it? Microsoft for 20 days straight, back-to-back green. I think it was like 21, almost 22 days straight. Or was it? Yeah. No, it was Meta. Excuse me. Wrong end. So Meta, 20 days straight, back-to-back green. So if you trade Meta often, you would know this, right? You would know, hey, it's on a nice uptrend, back to back to back. Sooner or later, that trend has to stop, but it's on a nice uptrend. That's 20 days of opportunity, a whole month of opportunity over and over.
So Niiko, that trading view would be the most up-to-date chart? When you say lagging?
So lagging as in, so we think of indicators like, hey, I want to be notified when to jump into a trade before it really starts to play out, before it starts to happen.
Mm-hmm.
Right? That's most people's mindset. Hey, if it's going to be an indicator, I want it to let me know, hey, at the beginning of whatever's happening, I want it to let me know before it starts occurring. Indicators will normally show the move while it is happening. So let's say, for example, the RSI. We're going to go ahead and focus on the RSI now, right? You see this cross?
Mm-hmm.
The purple line crossed above the yellow line. So it crossed right through it. This is what we call a golden cross, right? So the purple line is below the yellow. We're going to call this our average. So this is our average price. So price will continue to move, but the purple line is going to continue to move like the stock, up, down, up, down. So we have our purple line crossing above. This is our golden cross. We see upside. This is the beginning of our upside. So I'm going to circle right here, right? We got our doji candles as well. And we have our golden cross. When we line it up, where do we go, right? The beginning. Actually, maybe come delete that one. Actually, hold up. So the very beginning of that trend has already started, right?
Mm-hmm.
So let's say if we only focus on when the golden cross actually touch, right? As soon as it touches, we are already green. We already see 2 candles already green. We got a nice big body candle right here. And then from there, just straight bullish flow, right? But down here, we see that the cross started on the second candle. What I like to try to do, so remember, no matter what indicator, no matter which setup it is, it will never be 100% perfect. Same thing with the golden cross, the death cross, it will never be 100% perfect. So as I see price dipping, and then we see a change in the direction on the RSI, right? I try to look for the entry before we get the cross. So now I'm at the very beginning of when price is starting to cross. Right? So around here, I'm looking to see, hey, will price continue to break past that yellow line right there? Will this
So
purple
when would you enter the trade?
So
Around the yellow line, around the golden cross, or a little bit after?
a little bit, so I'll try to enter a little bit before it actually does cross. So let's say if I see some selling, right? I see a downtrend, or even over here, downtrend. I'm looking for price to start getting close to that RSI.
Okay.
So around here, right? So then I'll be early into this trade. But let me show you something, right? You see this
Does
right
the value
here?
does the
Go ahead.
volume go up as
When
the RSI goes up? Does the volume go up too? Is that a good way to watch it?
So it depends on which volume that you're looking at. So normally the standard volume that you see at this bottom, for some reason I don't like that volume. Let me put it up and show you guys. Indicators, alerts. I hate how to switch this thing up. Right, the regular volume right here. See, it'll show at the bottom. I don't really like this volume, right? So I'm gonna show you this right here. You see this big green candle?
Yeah.
Right? But what do we see up here? We see some nice movement, some upward movement. This is the bigger candle out of these three around them. But what is it really just pointing out? What we already see on the candle, right?
Yeah.
Same thing kind of over here. We see some nice upward movement. We have some nice big green candles. We have a nice big green candle right here. We would think, hey, we see a big green candle. That means we expect it to continue higher. So it would kind of confuse me with these volume candles at the bottom.
But that would be the moves already made though for that one you on right now, though, right?
Exactly. So for this example, it's already done. The move is already done, and now I'm getting a big candle at the end of all of the action that just occurred right here. So all these little candles are pointing out all of this movement that's already occurring. So that's why I don't really like the volume that's down here. So here's an example also, the big red candle, right? This big red volume candle right here. But at the top, all I see is a doji candle. At that point, we got a change in direction. So is this pointing out that we had a lot of sellers? Or is it just pointing out there's a lot of buying and selling going on in this candle? But in this case, on the candle, it doesn't really show or reflect what the candle is doing. There's a lot of volume, but on the candle it shows a doji. Indecision, no real direction yet. But we got a change in direction here. That's why I don't like the bottom candle. So
You. So on the 1 minute, when we see that golden cross, what I've tend to notice is that we could get a death cross like within 10, 15 minutes after. So it's like it changes pretty quickly. So, and then you wouldn't really see a contract appreciation since it happens so quickly. So how do you know to continue staying in even during a death cross?
So I'll kind of show you. Let's see.
Good question.
Let me find it where price continued. here, for example. Does it really? Not.
That was like 20 minutes, I think.
Here is a nice one, actually, right? So from here, the beginning, we got, even though it's small, we got a golden cross right here starting, right? Then another one right here. This is where the beginning of that full uptrend occurs, which is right here. We circle. Oh, hold on. Right here. This is the very beginning of this uptrend that starts to occur. Now we're going to see death cross within this trend up, right?
So is it that the clouds, the Imoko clouds or whatever, that tells you to stay in, or how do
The
you?
clouds help with determining trend. So what you're mostly looking for anytime that you're trading, in most cases, is looking for trend. Is the trend continuing, right? So in this case, we started here. Price went up, bounced down on this trend line. The only reason I have it a little down is because there's that red trend line already kind of pointing it out. All right, so started here, right? We got a nice uptrend. We touched that same trend once again. We continued to bounce. We touched it once again, continue to bounce from here, right? So we see a trend, a nice trend. So just recognizing this trend, we're staying in right here, right? So we see a death cross right here. So anytime we see upward movement, no matter what, you're going to see some selling occurring. It has to occur or it's not healthy. Here's another one, right? We're still going up. And then this is where the party ends, right? Right? This is where the party ended. We got our death cross right here. So we're still going to see death cross, small death cross though, within our trends. But these are very small death cross compared to right here. We see a nice big dip. What do we see right here? That's when that trend changed as well. It broke that trend that we just had. This could be a reason, hey, trend change, I can get out.
So yeah, like in this scenario, you would see the clouds dissipating, right? And then so once you get like a full candle close under, you know, like the trend's over, like get out.
Exactly. Or as price starts to get closer to these the clouds, so the clouds are pointing out trend, right? So as it gets close, just like the RSI, same concept, right? As it gets close to this cloud, price starts to break, and it's below those clouds as well. Now I'm not saying, hey, wait until it touches the cloud, because at this point we're on a nice uptrend. We touch clouds here. We're on an uptrend. We touch clouds once again slightly, and then we're still continuing. When price is fully in that cloud and breaks under, can be a reasoning, or once price starts to consolidate, that means that trend is kind of done, right? That makes sense?
Yeah, it does. So just combining all those indicators.
Exactly. The goal when it comes to you trading is making it as simple as possible for you to recognize what's going on in the market. That's why we use news. That's why we use candle patterns. That's why we use trend lines to point out what is going to be as simple as possible for us to enter into a trade. We don't want to complicate it. We want to make it as simple as possible. There will be times where I'll have no indicator on my chart. I'll have it just naked. right? Just to get an understand what is price doing, what's going on the charts, what is the stock doing, why is it going up, why is it going down, is it sideways, what direction is going. We add indicators on here to point out what we can see already on the candles, right? These same indicators, Lux Algo indicator, right? It's pointing out a downtrend, right? This full downtrend setup. These red lines pointing up uptrends. It's kind of backwards if you think of candles, but the red points out uptrends. So for this, for example, would have caught an uptrend. Then we caught a downtrend, right? This green, the full move is down. The short-term moves up. Short-term move, now long-term move up, right? So we're just recognizing what patterns occur over and over in the market.
Did you make those red and green lines, diagonal
Nope.
ones? Or?
It automatically adds it with trend lines with break algos, with Lux algos. Excuse me.
Gotcha.
Let me put everything unviewable. So, and let me remove our scrabbles that we added on, right? The RSI, we're good on the RSI.
Yeah. Also, can you use the EMAs to determine the the uptrend or downtrend too? Like you use the RSI?
So let's say if it touches your EMAs, right, or it bounces off your EMAs, a combination with also your RSI, what is price doing, who's in control, buyers or sellers, will give you a full checklist kind of on what is price doing. So you can use the EMAs to see where does price stop and technically use that as your support resistance kind of, right? So the clouds, when we had them, we used it as a support and resistance. When it touched it, that was our support when it was going down, right? And then above, same thing, same concept, resistance. When does it break through those clouds? Same concept with your EMAs. When does it break through those EMAs? Or does it reject or just bounce off of it? Make sense?
Heard you.
Add on the clouds back, right? So in this case, we broke a little bit above the clouds. We don't have a full trend, right? Number one, we don't even have a golden cross here. We actually have a death cross that occurred. But this trend, it stopped. It was done. Zoom in. We got doji candles back to back. Trend change. Boom. This death cross for those put pirates, right? We got our death cross. No small death cross, a big death cross, right? Price continue. Now you see these green candles right here, right? Should I get in the calls? No. The RSI is not even close. Now, does that make sense?
Yep.
Same concept on the bigger time frame, 5 minutes, 10 minutes, 15 minutes. You can use the RSI the same way as well, right? We see our nice big death cross right here. Seeing the fall. Now you see this right here. It looked like a golden cross was going to appear. We don't get the cross. This is on the 5 minutes. We don't get the cross. And look what happens. We only got a small run up and then a drop. So when price does not cross over, we see some downward movement. So RSI, Bollinger Bands, EMAs, any indicator is pointing out what is already occurring. What most traders are looking for is an indicator before the move actually happens, or to be the first one, right? We want to be in the trade or that reversal before it actually starts. using indicators, multiple indicators helps to kind of point out that direction or that possible change in direction, or even a continuation or trend. So the same concept with entries is the same with exits, right? Understanding when price changes and who starts to take control in that position. If you're up, take your money and run. If you're confident in the trade, or you're now starting to be a little iffy on the trade, take your money and run. There's no point of sitting in a trade you're not confident in. So let's say if it's working out, the first 5, 10, 15, 20 minutes, you're up 20, 30, 40, 50%. Now the trade is kind of starting to get a little iffy. You're like, I don't know anymore. Get out the trade, on to the next. Most of us start to fall in love with the trade. You're like, all right, I'm up 50%. I seen someone do 800% 2 days ago with the same stock. Let me stay in it longer. If you're up, take your money on to the next. There's going to be another opportunity, I promise. If it's either upsides, more bullish flow, or if you're a put pirate and you want to see the stock go down, right? There will be plenty of opportunities. The stocks must go up and they must go down. Right? If it's even if it's going up, it must start to go down in order for it to continue to go up. So just understanding trends. Use ChatGPT. Somebody was actually Sound the Syndicate was mentioning it a couple weeks ago, right? Use it to your advantage. Use it as your assistant to find news, find stocks that are related to each other, find stocks that have partnerships, find stocks that have done well in certain times, right? Don't just go into the market blind. You want to have as much information as possible for you to be able to take advantage of the market, to get the bigger picture on what's going on, right? Some news comes out, send it right to ChatGPT and ask it, hey, what does this mean? Break it down like I'm 5. It'll explain it to you with toys and colors, right? So simplify your trading as much as possible. Your resources, right? At the beginning, you don't have to use ChatGPT paid. You don't got to use TradingView paid subscription. You can start out with the free, understand what's going on, understand how to use the tool before you start going into paying for subscriptions on TradingView and different things. Understand how to use the tools to make sure that it's fit for you to be able to use it. Some people use Thinkorswim for their charts, right? You have TradingView, Thinkorswim. Some people use Robinhood. Don't use the Robinhood mobile, please. Don't send me a screenshot of Niiko. I'm looking at this chart right here, and this is how it's doing. At least have TradingView or Thinkorswim so that you can see the charts much more clear. You can add your indicators if you need to. You can get a full in-depth concept or understanding of the bigger time frame or the smaller time frame on it. It'll be more precise on your entry, more precise on your exits. Right? Any questions, guys?
Negative.
Oh, you're up on Hammer chat, my bad. Okay. Y'all still with me? Oh, we got a big crowd.
You're
What
still
up,
here.
Lon? What up, Shay? What up, Ricardo, Nelly, Lenny, Kim?
Hey, how'd you get that indicator under there?
Which one?
The cross on TradingView. How you put that on there? Mine's ain't on there.
Which cross? This?
The golden cross at the bottom, at the very that purple and yellow line.
On where?
The purple and yellow line you on right now.
Oh, the RSI?
Yep.
Oh, go here. My bad. Go here where it says indicators, metrics, and strategies.
Okay.
You can either search RSI or you can search relative strength index. So the relative strength index, this helps determine when something is overbought or oversold. Overbought normally is above 70. So on the bottom, towards the right side, you'll see the numbers just like you'll normally see for the price of the stock. Above 70 is overbought. That means they bought too much in a sense. Sooner or later, it must go down. Below 30 is oversold. Sooner or later, same concept. It must be bought back up. So it must go back up. So in this case, we were showing oversold, right? What did price do? Started to consolidate a little and started to trend slowly up. Same thing with the RSI as well. Started to trend up. Then we started to see some sideways movement. And then on to the next day where we see price oversold once again, right? We got to see what happens next. Price is starting to trend up. Remember the RSI, it's going to go up, it's going to go down. It's going to go up, it's going to go down. Just because it shows in this area does not mean that it's going to continue where it is. So if it's below 30, for example, on the RSI, that doesn't mean it's only going to be for a minute, 2 minutes, and that's it. It's going to show that oversold. This was almost half the day where it showed oversold. What did we see? Downward movement from it being overbought. Free market showing some overbought, right? Then we got oversold. So below that 30. I'll scroll back, and find another day where it kind of shows what we're referring to as well. All right, so overbought in this case right here. Overbought once again. By market open, we sold off. Right? By market open, so we got pre-market. By market open, we were already sold off. It shows oversold by market open. From there, at open, excuse me, we've seen a nice uptrend. Now remember, same thing with the market. You can see sideways movement, choppiness. So this would be a day for a scalper, right? Someone that's in a trade, out the trade, call it a day. Most of us are looking for, let me jump in at 9:30 and just sit in the trade all day and just watch it go up over and over. No, sooner or later, it has to go down. It could be 10 o'clock, it goes down, or reverses, excuse me. It could be 10 o'clock, it could be 11, 12. Sooner or later, price may reverse. That makes sense, everyone? Y'all still with me? Y'all still with me?
Yes, sir.
Yes, sir.
Anyone learning something new? Anyone it's just the same? It's more repetition. You're y'all still with me? Y'all still with me? All right, good. Oh, and at the beginning, I was going over. I do recommend watching this video. This video I watched over and over and over. It's on the basics. It's on understanding options, how they work, calls, puts. You want to understand the basics like it's the back of your hand. So that when the market is open and you're in the moment of the trade, whatever it is, you're about to jump into a trade, you want to understand everything fully. You're not second guessing yourself. You're not assuming. You want to be prepared fully. We do have a crazy earnings week continued. Let me go ahead and post earnings as well for us. Earnings season, oh my lord. Earnings season continues.
Tomorrow's on the floor.
So remember, earnings is like a scratch off, right? The price can work in your favor or it won't. But the thing is, price could go up and it still doesn't go up enough because of the implied volatility, right? So remember that thing IV, implied volatility. That's a factor that calculates what price is when you're buying and selling your contracts. So your premium. If that decreases, then the value of your contract does as well. Let's see. Let's see the implied moves as well. So the implied moves is where the stock can potentially go up or down. Let's see if it got posted. Yes, it is. There's 718 companies reporting earnings this week. 718 companies. The
What's
one
your
that
Twitter again?
mine,
Yeah.
Niiko the chef, Niiko the chef.
Heard you.
So if we know what the implied or expected, the possible expected move is, like Nvidia, oh my gosh, 9.2%. Let's say the stock is at $100, right? If the expected move is 9.2%, that means it can go up or down $9.20. But that does not mean, go ahead, someone have to say something. It does not mean that it must go $9.20 up or down. It can go up $20, $15, $12, $8, whatever it is. It's still depending on how the market reacts to that stock. So it's still going to be an estimate on the implied move. The bigger the implied move, we normally expect a crazy big jump, right? Anytime that I see like 20%, 30%, that means one or two things normally. It's been doing very well, right? And it can be something where a lot of eyes or attention is on the stock. So that move can be detrimental in a sense to what happens for earnings. Or the stock is very low price. It's like Snapchat or it's like something lower cost. And that's why it'll go up 20%, 15%, 10%. I do love a stock that's at least like
President Trump given another set of lawful orders, and they will be fine. If they're not
like watching the videos already. I do love like
Yo,
a
so it's not
uh,
based on previous earnings average. That's what I thought.
implied move.
Yeah, the volatility.
Volatility changes, right? So think of it just like the fidget spinner and how popular it was at for a moment. That high demand goes away when earnings when the market opens, let's say after reports. So let's say at first the contracts were expensive. Let's say you're looking at Netflix before you got into Netflix and they had earnings, for example. They're going to be more expensive compared to a week before, 2 weeks before, 3 weeks before, 2 months before, because the market is expecting a big move. When the market is expecting a big move or some news, the contracts will be more expensive. So when that contract is more expensive, let's say earnings occurs, right? The stock goes up, boom, stock goes up $10. Even though the stock went up $10, if the want and demand for those contracts are not the same like prior to earnings, they didn't beat it out. They didn't beat it out the park, right? Flying colors, then the value of the contracts can decrease before market even opens. So as soon as market opens, that value that you saw on the Robinhood watch list and you did the simulator, the value of that contract is not going to be what it shows or reflects because the implied volatility is not the same as what it was before. Does that make sense?
Hell no. So what you just said again, big
Yeah,
dog.
say it one more time.
So the demand or want for those contracts before earnings occurs is high. So anytime that you're trying to buy a contract right before earnings is occurring, they're normally more expensive compared to a normal, regular day. Has anyone noticed that it's more expensive when you're trying to jump into an earnings trade?
Oh, the contracts. Okay,
The
okay.
contracts themselves, right?
Heard you, heard you.
So let's say if I normally see a stock at $200, $300, $400 for the contracts that are two in the money, right?
Mm-hmm.
Now, as it gets closer to earnings, those contracts are $600, $700, $800 just to get into those contracts
Damn.
that are two numbers in the money from where it is. So it's now more expensive to get into the trade because a big move is expected. So if they know 20% is expected, 10%, 6% is expected on the stock to move, the contract values are now more expensive because now you can make money in a short period of time real quick overnight. But let's say that want and demand when market open, if it goes up, the value of your contracts can still be down, still decrease. So what you can do to kind of help yourself out, go further out helps. So further out expiration contracts help versus you doing the same week expiration or the next day or 2-day expiration. So now you have more time. So what do you do when you're buying further out contracts? You're buying time. It's going to cost more, but you're buying more time for whatever needs to play out to play out. So let's say if you buy something that is 3 months, 4 months, a month out, right? Let's say the IV is high for that week because of earnings. Once that implied volatility and fluctuation goes away, maybe some new news comes out. Maybe the stock is a focus, that sector. Now you get implied volatility once again. Now you get an increase in volatility or the increase in the price once again. So there's basically also a concept where I'm trying to figure it out myself, where you can trade on increase implied volatility. So if you know that the prices are about to increase, so let's say a few weeks before earnings, this is why I call it a pre-earnings run-up, then the contract values, you're buying it before they start to get more juice because of the implied volatility. So anytime that news is expected, a report is expected, an event is expected, the stock contracts are going to be more expensive because a move is expected to happen either direction. Does that make sense now, guys?
Heard you.
Who got a dog?
My bad, that's me. Yo, question.
Go ahead.
So I've been seeing with earnings seasons, right? I don't know if this has any logic towards it, but I've noticed a pattern where the calls or either direction, but let's just say a call $1 out the money would be more expensive than like a put $1 out the money. Does that mean the market is like expecting that direction, the most expensive direction?
Not necessarily. So with the market, it's not always where if you see most people on Twitter or whatever it is thinking something's bullish and the stock goes up. Because no matter what, it's still depending on what gets reported. But there is a saying, someone always knows. Someone always knows whatever news is about to come out. Someone always knows. There's plenty of times where we've seen big orders or big trades get put in before news or something comes out, and they make bank because someone always knows. Just remember that. But don't always follow the herd. Don't always follow the sheep. Some people say, "Oh, let me find where everyone's buying into and start buying into that." That doesn't mean it can work out in your favor. Maybe you're buying too late. Maybe you're late to the party, right? So now it doesn't benefit for you. It's only benefiting for everyone else that was in it before you. You're just their liquidity exit. They needed you just to be able to get out, in a sense, right? So just because there's big volume doesn't necessarily mean, all right, just because all the orders are going into calls right now, mean it's going to play out. Let's say you try and think, all right, I want to stay in the trade for 5 minutes, 10 minutes, whatever time frame it is, 2 weeks, 3 weeks. That moment of volatility does not determine what can happen over the next week, 2 weeks, or whatever it is. So it does change. Volume changes no matter what. That makes sense, Gav? Don't necessarily follow the sheep.
Yeah, thank you.
Copy.
Follow what you see. So if you see a setup where it's bullish, bearish, following trends, it's much easier than trying to predict where the price is going based off of where everyone else is. Because you could be too late into the market. Be the one that everyone else is following, in a sense. There's times where you may have entered into a trade, you got in early, and then after, everyone starts talking about it. Everyone starts focusing on it. You were just in it before the trend started, or you were early into the trend. Any questions, guys?
Not at the moment.
Anyone else on? Can y'all hear me?
Loud
Yeah,
and clear, sir.
we got another question. So
What's
how
going on?
come the RSIs change up from the time frames you're looking at? Like you'll see a daily RSI could be super high, but when you're looking at the minute or something, you'll have a low one in Golden Cross bullish trends.
So the smaller the time frame that you're looking at, the more of in that moment that you're paying attention to. So if I'm looking at the 1 minute candle, I'm focusing on what's happening at that moment within that minute, right? So let's say if I'm focusing right here, I'm only focusing on what is happening on this 5 minutes, on these 5 minute candles. But let's say if I zoom out on the overall day, on the daily charts. Let's say if I have long trades, a trade that expires in 3 months, right? 5 months, 6 months. That 5 minute green candle is not telling me what's overall happening right here as I'm looking as for an overall trend. Does that make sense? So when we zoom out, we're looking for the overall picture, just like how Meta was going up for 20 days back to back. Let's say if I see on the 1 minute a red candle, does that mean we're fully bearish?
Damn, no.
Right? All this green. But if I see one little red candle, so this is on the daily, so each candle is one whole day, right? But if I see on the 5 minute a red candle on this day, does that mean it's bearish? Does that mean the price for the overall daily is changing?
Hell no.
No. If we're looking at the RSI over on the daily, we're on a nice uptrend over here. What did we see occur? We see a death cross, right?
Yep.
And this is on the daily. A few days have occurred, 4 days. We see that doji right here. and then 3 days of back-to-back red. But if I see a small green candle within these 3 days, that doesn't mean price is going to reverse. It may be for a few candles, maybe for 3 minutes, 5 minutes, 10 minutes, 30 minutes. But overall, this is bearish.
Gotcha. Thank you. Yeah, so when you're planning on swing trading or holding trades for multiple days, then you for sure recommend just looking at larger time frames.
Exactly. That's when you're looking at the 4 hour. That's when you're looking at the hourly, the daily, the 30 minutes. Kind of play around with those to see what makes it easier for you to recognize an overall picture. Overall, in most cases, as long as it's a good stock, a good company, it'll go up, right? Over years, it'll go up.
Damn.
Our goal is really just to try and catch it when it's down and it goes up. It's down, goes up, down, goes up. That's our goal. But in most cases, what we can just do is be a part of this upward movement, right? Let me zoom in. Be a part of the upward movement. Join the trend. As soon as trend starts to change, find a new trend. Something else. You don't have to trade the same stock. You can find a new opportunity. There's somewhere, somehow, another opportunity. It could be another sector. It could be another one of your stocks on your watch list, right? But just because you see a small red candle doesn't mean price is changing. That's why we look at bigger time frames to see the bigger picture on the overall trend. 20 days of green, and if you see one 1 minute red candle, doesn't mean the overall trend is done. Right? Any questions, guys? You got to make trading fun. Don't forget that. Don't be scared to ask questions. Make it easier for yourself. Help me help you. Because you don't know what you don't know, right? I know you're all ears, understanding, but don't assume anything that I'm saying. Have a full, clear understanding on whatever it is.
Gotcha. So when you're looking at the RSI and the EMA clouds, when you see a dramatic like divergence, like on Meta, we were just looking at the chart and we seen it dropped off big time. Can you always expect the purple and yellow lines to eventually, get close to one another again if it's like such a dramatic drop? Like,
So let's see this drop right here, right?
yes, this one.
So let's say we're on a nice uptrend. We'll see a nice big drop. Let me find another one where we got a big drop and then a quick reversal. Let's see. Big drop, humongous drop. This is earnings. This went from the high of this candle, 495, the low 414, so almost $100, right? We got our death cross here, golden. Let's see. Yeah, death cross from here, and a quick golden cross right here. So there's plenty of times where we've seen price dip, and then it fills that gap, right? So price dip, and it still filled that gap where it dipped from, and then we see a continuation. Is that what you're referring to?
Yeah, pretty much. I guess that's what it's called, gap fill. So when it's just a dramatic change, like eventually it'll recover that.
Exactly. So those are gap fills that will normally always occur, right? Almost always occur. So here, let me show you how it's easier to see the gap fill. So let me change it to candles. Let me go back to that same area. You see this right here?
Yeah, huge gap right there.
That's that gap that normally would be referred, and right here as well. This is the one that we're just looking at. This gap, it went down, right? Opened here, and then that gap got filled. All of this filled back this area right here, if that makes sense, right here, right? Which I can do trend line. So right here to here got filled by these few candles. Anytime that we see price, we see
So that's
that.
about. Go ahead.
So anytime that we see this, right? We see this is our resistance. This white line would be considered our resistance if it was playing out right here, right? We see a nice big candle above the resistance, and we see a continuation. So in most cases, if we see a resistance and a nice big green candle through that resistance, so we will normally see this on all time frames, the 1 minute, 5 minute, whatever it is, right? Same thing even over here. We see that it struggled to get past this resistance. This is the same line. Actually not, it's above it. So same concept. It struggled to get above here. What do? Get a nice green candle, a retest, and then a breakout. Here's our gap, went down, and we refilled that gap fairly quickly. The gap, sometimes it could be filled later on. It could be a week, 2 weeks, 3 weeks, sometimes right away, 2 days. But sooner or later, it'll most likely, if it's as long as it's a good company, that gap will be filled right back again. And what did it do? What did it do after, right? The top of that gap down was our resistance for a little bit. And then we broke through. Go ahead, any questions, any questions? Does that make sense, guys?
Yeah.
Yeah, dude.
Everyone else?
Yeah.
Persky.
All right, let me finish with earnings. Earnings about to be crazy. Nvidia is definitely about to help determine what the market is doing this week.
Those further out contracts is expensive as hell, though, brother.
What you looking at?
I was just looking at B-Fly. This one's not expensive, but like any other contracts for other stocks are a little bit more expensive. And this is my
Of
paper
course.
trading account.
So what happens is when there's a lot of news surrounding a company over and over back to back,
Yeah.
price continues to increase, increase, increase. The moment that it's not the hot commodity that everyone's tweeting and looking at, that's when those prices start to decrease. That's when you can start loading up. And then once some news comes out again, boom, take advantage of the implied volatility. And if it's good news, take advantage of the move up on the stock also.
Heard you.
So that's why for a while, over and over, I'll be like, we're jumping into Alibaba, we're jumping into PDD. The sector was trending, was doing well. And then over and over, we had news. We were able to catch moves based off of news. So it gave a catalyst. So the price of the stock was increasing and our implied volatility was increasing as well. The next sector, of course, we always want to try and be ahead of everyone else, right? We want to kind of try and find what is being focused on. What is everyone looking at? We want to be early. The news only lasts for so long. What does that mean? Let's say an article comes out. Boom, article comes out, stock plummets, goes down, it's plummeting. It's like a whole bunch of fallen knives, right? Sooner or later, whoever was selling, all that selling has to slow down. Sooner or later, it has to slow down. People see it on clearance. They say, all right, it's a sale, time to buy. So even a company I've seen over and over, company announces bankruptcy. Yeah, we can't make it. We're not going to be able to do this. Files for bankruptcy. Article comes out. Stock plummets. whole day just going down. Then the next day, stock starts to go up a little bit, right? What goes up must come down and vice versa. People see it's on clearance. They start buying it up. Then sells off again. So sooner or later, news only lasts for so long. Same thing with SMCI. We had a nice uptrend over and over, back to back to back. I think it was in the hundreds at one point, right? Just going up because the AI, that was the main focus. That was the main factor that was helping the semiconductors go up. Then boom, news that SMCI, the way they're moving, it's a little iffy, fishy. They might be doing fraud. We got to look into them. Stock just starts to plummet. Boom, going down. Now, one thing I do want to point out, right? The CEO of Nvidia sits down with the CEO of SMCI as they're saying the stock is getting delisted. So they're still talking about what we're doing, what we're working on. Months later, now we see the stock is back up, continually just going crazy, right? So different things occur in the market. You want to notice, kind of point out, but make it as simple as possible. Get as much information as possible. Don't stop learning, right? YouTube University. I still watch it every day. I hit my YouTube history crazy. Trading options for beginners, strategies. I use ChatGPT for this or that. How to code your own strategies, right? To make it as simple or easy as possible as we are in the market, as we trade, to point out or recognize patterns, right? Not every indicator may work for every single person. At least understand how they work to see if it can, so that you can try something new, try a different setup. But if your setup is working, if 80% of the time, 70% of the time is working for you, keep doing the same thing over and over and over. Don't change it, don't switch it up. The moment you switch it up, that's when, boom, that's those red weeks, red months, because you're kind of not using that same strategy or something that was working for you. Right? Same concept with, let's say your portfolio increases, right? It goes from 200 to 2,000. Just because it went from 200 to 2,000 doesn't mean, all right, let me jump into $200 trades, $300 trades, $400 trades, $1,000 trade. Continue to do what works. The reason why, let's say you jump in to a $300 trade, but you're used to $150 trades. You normally let your trade go down at most 50%, 40%. If you go from $50 and your 50% is 25, but then you go from that $50 to 300, that 50% changes to 150. Big difference, right? So understand, if it's working, don't be in a rush to increase what you're spending on the trades. Because if it doesn't work out, the same concept of, hey, this trade's not working out, you're losing more in a short period of time also. So I know we all want to turn 300 to a million overnight. Compound. Like your trades build up over and over time. And the same thing as well, right? As quickly as you get it, it's going to be as quickly as you spend it. So if you think, hey, I just turned 3,000 to, or 300 into 3,000 overnight, that'll be your mindset over and over. So now you're going to try and do the same thing. All right, I just did it, so let me just mimic it. Right? Same thing over and over. Let me try and do it again. Let me try and do it again. See what works, what doesn't work. But don't overtrade. Don't be risky all the time as well. I do want to say. Some of you guys will only trade on Fridays. Like, yo, you're lying. You're not serious. You only want to do 0 DTE trades. You want to turn 400 to 4,000 overnight or in the same day, over and over. You got to kind of cut some risk down. You don't want to have every trade risky. All right, let me do this risky trade. All right, let me try this 0 DTE trade over and over, back to back. SPX, 0 DTEs every single day. That's the only thing you're trading. I know we want to make money, but that's doing scratch offs back to back. Unless you understand how SPX moves, understands how QQQ moves. But don't do 0 DTEs over and over. You want to think long term also. Build up some shares. Build up on leads. Let's say if we see some red for the next 3 weeks, month, 2 months, the long-term trades, they play out. Still works. 6 months out, 3 months out, 4 months out, a year, 2 years out. Sooner or later, as long as it's a good company, it'll go back up. Same concept. Any questions, guys? Y'all still with me? Y'all still with me?
Yes, sir.
Yeah.
All right.
Yeah.
Anyone trade ABGL Broadcom yet? For 2025?
That's out of my tax bracket, brother.
No, it's not.
Yeah.
Yeah. Has it been doing well? Plenty of opportunities on both sides, up, down, literally. So you want to have a stock in your watch list that you know there's opportunity, right? Either on a nice uptrend, a downtrend, maybe they always have new products, new services, whatever it is. You'll look at a stock like AT&T, right? Look at their last year. Let me pull it up and show you. The ticker should be just T, I think. Right? Yeah. Now, mind you, we're still on the daily. Now, from where's the beginning? Oh, all right, perfect. So from the beginning, which is in 1984, it was the lowest at $3.46. $3.46. The stock, the highest it's ever reached, $45.24. Right? So not a big difference compared to a lot of the stocks that we look at. Apple, Google. Excuse me. A very big difference compared to the stocks that we look at. Apple, Google, Microsoft, Nvidia, AMD, ARM, Alibaba, right? 346 to 45 compared to, let's say, I already said it, $80 to 300 for Alibaba. Nvidia has gone crazy, right? If we look at the overall, big difference, right? So notice that it has opportunity, it has movement, it has things where it can go up 20, 30, 40, $50 in a day, $10 in a day. Compared to AT&T, that'll go up. Let's see. Now this is within 1 day. Probably the biggest candle on here. That was green and recent. This is what, $1, and the low was 24.60. The high was 25.93. $1.30, right, in one day, compared to what we normally look at. So something like this, you would have to do more long term, some leaps. Let it kind of gradually increase in price over time versus doing a week-long trade and you're thinking it'll go up $2, $3, $4, $5, $6 in a day. It's going up 20 cents, 10 cents, 5 cents. Contracts don't really move when it comes to action like this. So know what you're trading as well. How volatile is that stock? Does it go up $100 in a day? A stock like that is going to be expensive for the contracts. If it can go up 100 or down 100, up or down $50, $40, contracts would be more expensive. So know what you can trade with your portfolio size also. You can start out more small, right? Alibaba, Baidu, right?
GSK.
Look at this. Look at Alibaba, just on a rocket. So just be careful with what you're trading. Even though it's going up, it may not be the best for contracts, depending on what strikes or what strike and expiration you're choosing. Let's say the stock is at $14, $15, and you choose a strike of $17 a week out. But for the past 3 weeks, the stock only goes up $2, $3 or $1.50 within a week. Right? So price, you're easily getting hit with time decay, everything against you on that contract. Make sense, guys? So know what you can trade. Know what you can trade. It's key to know what you can trade. So don't forget, we posted the implied volatility. So the expected move for earnings. So 718 companies are going to be reporting earnings. If you have some gains already, then you can trade earnings. It shouldn't be your way of thinking, all right, let me try and look for my gains this way. Any questions, guys? Anything you want me to go over?
So this is not a week to try and make some money if you got a small profile.
Well, no, I'm not saying that at all. There's always an opportunity somewhere. But I want you to remember this. So let's say Nvidia reports earnings. I think it's on Wednesday. Let me see. Nvidia, where is it?
Oh boy.
Where is it? Am I blind? I'm looking at the wrong chart. I'm tripping. There we go. Yeah, Wednesday after the market closes. So let's say Nvidia announces earnings, right? And you're in AMD, right? AMD's contracts pretty low cost, right? If Nvidia reports earnings and they do bad and you have calls, your AMD calls most likely are cooked. If you have AVGO, Intel,
Any of the
Micron,
chips.
exactly.
So does
So
that include Super Micro Center too?
Super SMCI.
Yeah.
So technically, yes, as well. A part of it has to do with chips.
Heard you.
So these companies can actually, to be honest, Nvidia can bring down most of the market also. It'll be like a domino effect. So, or it can do well and help most of the market. So I'm not saying this week is not going to be for small portfolios because we have during the market. You can catch some puts, you can catch calls, depending on where the price goes. I'm not saying, hey, jump in before Wednesday, 4 o'clock, and then 4:05 you're in a trade and you're like, damn, I just spent a lot too much of my portfolio to even risk it.
For
Trade
put,
light.
for put, you got to spend more money, right? You spend more money when you buy a
No,
put.
same concept as calls versus puts. So let's say if I go and buy a call and I buy a put, I can end up spending around the same depending on where I go with my strike. So if it's, let's say if it's at $100 and the strikes that are there are 102.50 and then 105. And then from the downside, 97.50 and then 95 for puts, right? I can still have a close price. So let's say if I spend 200 on the call, it could probably end up being 200 or close to 200 for the put. When you're in a trade before earnings gets announced, what occurs is, let's say if you're in a call in a put, what you'll see sometimes is if the implied volatility is increasing or decreasing, you'll see your call and your put gaining or losing money together. You're like, wait, why am I in a call and a put? The stock is going up, but my call and my put is making money because the implied volatility is increasing.
Damn.
So some people literally try to trade off of only the implied volatility increasing, which is pretty lit. It's like trading off of premiums. I'm trying to figure that concept out, and that'll be a gem for y'all. But trading off of implied volatility allows you to make money without the stock even really going up or going down.
So you're really just making money off the hype?
You're basically.
Damn. What the?
It's like the demand, the want. It's like you putting something on eBay and then now it's a hot commodity. Everyone wants it. And then now you just go back in and just edit price. Like everyone else is selling it at 300. I was selling at 100. Let me change my price because what? Let me get the top dollar also. Any questions, guys? Nothing you guys want me to go over? Something specific, a stock?
What is your checklist that you go through before you enter a trade?
Ooh, I see. Very nice. So it depends on what it is. So let's say if it's news based, an article comes out, I posted in the Discord, and they did a partnership or something, right? The companies get together. So number one, I'm looking to see if momentum is continuing. So if it's good news, I'm looking to see if the buyers are really in control. The RSI, for me, you all know that's my favorite indicator, right? So is the RSI looking good? So I'm looking at the 1 minute. So I'm looking to see what is price doing as that RSI is increasing and dipping as well. So when it goes down, when the RSI goes down, for example, how low is it going after it crosses that yellow line? Is it respecting certain prices? So I'm checking to see, hey, maybe it's around $95, $97. Is it going to get to 100? Is it going to get to 105? So RSI, what kind of price action is going on? If it's news related, how quick is that move occurring? If it's news, I'm trying to be honest, quicker on the trade compared to if I'm looking at something else. The reason why, like I said, news lasts for so long. Sooner or later, they're going to start looking for something else or focusing on something else. What else? What else? What else? Actually, I know I got some boot camp students on here. Let me get some boot camp students on here. Who got their list? Who got their list? Herb, Courtney. Put them on the spotlight.
Missed it. I went to the bathroom. What is?
You're good. They asked, what do I need for my checklist when it comes to entering into a trade? What are some good things I can put on my checklist when trying to enter a trade?
Oh, okay. That's easy. The
know.
RS. Oh, okay. You mean tell them?
Yeah, go ahead. Got your notepads out.
The RSI of I'll let you explain them. The RSI determining whether or not there's a bullish or bearish trend. Checking the chart or the trade to make sure we're either close to support or resistance. And based on that price action, determining whether or not to buy calls or puts. Making sure you know what your stop loss is. Checking out the volume on the contracts. Make sure the volume is really high so you're able to get in and out of the trade. Looking at the time decay. And of course, at the end, the price action. And I also check the EMAs though too.
I know you added that one. Nice little new gem. So see if there's a breakout or a breakdown, right? See if it's a false breakout.
She
Right?
said the EMAs.
Yeah, she added on the EMAs as well to her list. So if it's touching her EMAs, if it's rejecting her EMAs, she has a certain EMAs that is much easier for her to recognize reversals or continuations, or she's using her EMAs as a support and a resistance to see if it bounces through or rejects it.
Do I have to make my own support and resistance lines?
There are indicators that automatically can
Pivot
give
points.
you, yeah, pivot point. Yes. You can also search here, and I think it's like highs and lows. Yeah, there's pivot points, high and low. That's what it was.
Pivot point, high and low.
And ORB,
Yeah.
if you do ORB trading, it'll,
So
make the high and lows.
the ORB is the open range breakout. So what it automatically does is it gives you a support and resistance above and below for the first few candles. Once it breaks through, let's say above, then it's bullish. You would go for calls. Let's say it breaks below, puts. So it's bearish.
Damn, I'm on Webull and I don't know.
No, sir.
I set them indicators over here.
Yeah, it's a little different on Webull. I would say if you're gonna use Webull,
We was slower.
Really?
I would.
Nah, for real, Reed was way slower. Thick and Swift is quick in this trade.
Thicker Swim is professionally made in a sense. Basically, it's more for professionals when it comes to trading.
That's cool. I got both. It's cool.
I'm having both.
We will have you out of there.
For real. Okay.
Robinhood and Webull is more, I would say, user friendly compared to like Thinkorswim. But Swim is a full on look at the charts and you can trade from there.
Opening.
But the open range breakout points out where you can use a support and resistance early in the morning once market opens. And once price breaks, you'll normally see sometimes where price will break, it'll retest that support or resistance that open range breakout made, and then continue from there.
Open range breakout. Cool. Was there one more, or was that the indicator for support and resistance?
So open range breakout helps with early morning support and resistance. Then you can use the high and low, or also known as pivot point high and low. I don't know if that's already or if it's on Webull. Just switch to trading view, brother.
You know what other pivot points I like? The Camarillo or Camarillo, something like that. It shows you not just like the pivot points, but it shows you like which ones are support or resistance, and it shows you different levels for them as well.
With a K?
I think a C. But I think you got to go to the pivot points, and then we'll see. I think I just go to pivot points, and then I go to the settings and change it. But I mean, I don't know. Those other ones probably work still too.
Camarillo?
Yeah, go to regular pivot points, and then you're gonna go to the settings, and it's gonna ask you which kind of pivot points.
People got their strategies too. On TradingView, you can make your own strategy and save it so others can use it or you can reference it. So there's a VWAP pivot, classic, Camarillo.
You said
You
pivot
see
point high.
pivot points high and low.
Yeah,
Automatically.
if you go to pivot point standards, it should let you change the settings on it.
I don't like this, man.
I've seen pivot point super trends. All right, but remember, indicators will never be 100% perfect, right? So we're just using this as a reference to point out, let's say, a support, a resistance, a trend, whatever it is, the indicator it is. It will never be perfect. Always remember that. Any other questions, guys? Everyone got the checklist?
Yes, sir.
What I'll most likely do, what's tomorrow, Monday? I'll actually end up running another Zoom and go over quite a few things for you guys. Number one, forgot to record the Zoom. So I did. You should. For sure.
Shaking my head.
Hold on.
No, it's
Wait,
recording.
no, I was
It's
gonna say I
recording.
got a notification that said it's
Okay.
recording.
Yeah,
Okay,
you tripping, bro.
Okay, just making sure. If not, woo,
I'm paying attention.
people's gonna be mad. What? We got some gems on this one. I ain't gonna lie.
Yes,
Yeah,
indeed.
Remy was finna get right off her head and right on your
I was
ass.
about to say she was about to. That head spin was about to stop. Let's see. What else? What else do you think I should go over, Kurt? Or Remy?
As far as what?
Remy has all the basics.
Like entry criteria?
Everyone has their checklist.
Now, can you write it down one more time, brother?
Cornier or Kurt, or if you wanna post it here to make it easier for you. Actually, Perp kind of started already putting it in chat. Trend volume on contracts. So is it a night? What kind of setup is it? So is it breaking out? Is it breaking down? False breakout. So having multiple confirmations. So is your RSI crossing? But you don't necessarily have to use RSI, right? You can use other indicators that you may find it easier for you to point out maybe a reversal or a trend. But adding on a combination of more than one reasoning for you to jump in and jump out of a trade. And make sure you're going back to back tests to kind of see what is working out. If you need to have a partner, say, hey, can you jump on Zoom? I pull up charts, you practice, and then vice versa, so that it's much easier for you to get used to the market. Right? Crypto's open 24/7, 365. It kind of works in a sense the same when it comes to the market with like news. So news can affect certain crypto. Same thing with your technicals as well, bullish, bearish, volume, same concept. So as much practice as possible so that you get used to it. But having those, it could at least be minimum, I would say, 3 reasons on why you're jumping into a trade. Right, that full checklist on why. Of course, add on more so you have more confidence. If it doesn't follow your rules, if it doesn't follow your setup, don't take the trade. If it doesn't follow all your lineups on what reasoning you want to jump into a trade, don't take the trade. Say, all right, I'm gonna wait for something I can be more confident in, something that lines up with what I need. That trade may work out, right? You didn't jump in, it didn't fit your criteria, it may work out. But let's say your strategy is 8 out of 10, right? 8 out of 10 times you follow the same strategy, it works out. So now the moment you start switching it up, that 8 out of 10 changes. That makes sense, guys?
Yes, sir.
Yes,
So
sir.
everyone's list will be, some will be the same, like volume, of course. Certain things you need volume on your contracts automatic. Right? That is for sure key. If you want to be able to, just like Courtney said, if you want to be able to get into a trade and get out and know that you'll be able to get out of the trade, you got to have volume on that, onto that contract, not just the stock, on the contract. So you want to look and see, hey, what is the actual contract showing before I jump in? The stocks that are, the contracts that are around it. So let's say the stock is at 100 and you look at the 102.50 and there's 5 on the volume. And then you look at the 105 and it shows 2,000 on that one. I'm going to the 105. So now when I jump into that trade, it'll be much easier for me to get in, get out. Get in, get out. There's going to be someone I can sell it to. Let's say the out of the money contracts, right? The further out of the money you go, the less volume you see. The further out of the money contracts you go, the less you'll see. And the further contract or further expiration you go, the less you'll see in volume. So you'll normally see the most volume on 0 DTEs, weeklies, so a contract that expires in a week, 2 weeks, 3 weeks, about a month, all the way until maybe, well, it's gonna be maybe like 3 to 6 months. You're still gonna see some crazy fluctuations of volume. But those far out of the contracts, out of the money, and expirations, you're gonna see less volume. So be careful with those ones. As time goes by, of course, you start to see volume start to increase. It'll be just like that contract that expires next week with a whole bunch of volume. All right. Any questions, guys? No student left behind. I want to make sure everyone has a full understanding.
Yeah, what news will affect Tesla this week?
What kind of news?
Yeah.
So, oh, actually, we do have to post the economic calendar. So we do have some speeches and reports coming out. And anytime that we have those, it affects Tesla in all or most of the market. Oh my gosh. We got a full week. All right, so let me try and be quick. Consumer confidence 10 a.m. on Tuesday. We got a few speakers on Tuesday as well. So Monday, no news, which is good. Tuesday, 11:45 and 1 p.m. We got 2 speakers. Let's see what else. Jobless claims Thursday before market opens. So if you swing anything on Wednesday before market opens, if it's a call and numbers are bad on jobless claims and the market dumps, you will not be able to do anything but see red. So just be careful with swinging Wednesday into Thursday. We got GDP at 8:30 as well with jobless claims. So we're going to see how that goes. And that's based on Q4. Pending home sales. We got PCE on, oh my gosh, busy week. 8:30 for PCE, so before market opens. So if you swing anything on Thursday into Friday, you will not be able to do anything. So just be careful if you're going to swing on Wednesday into Thursday and Thursday into Friday. It, of course, does depend on what you're jumping into. As I've noticed, is the China stocks, they normally, of course, have their own government news or basically the same concept of GDP and PPI and different things like that. So their reports normally affect the China stocks. That is what you'll notice at least. So depending on what you're looking at in the market, just be careful Wednesday into Thursday, Thursday into Friday. But Tesla, for example, Wednesday into Thursday, Thursday into Friday, it can do some crazy things. So just be careful Monday and Tuesday and Wednesday as well. We can kind of see it more based off of what is going on. So if some news comes out that day or that morning or during market, we can base that move from there. For me, I'm more of a person that likes to trade based off of news. I like to at least see a reasoning or an opportunity. I didn't get a chance to fully see what news came out this weekend, so tonight I'm gonna skim through all the news that occurred this weekend and see if there's anything that's detrimental for Tesla to go up or down. Actually, what you can do, I think right now, 24-hour trading open for Robinhood, so you can kind of get an idea. Now remember, this is not what the stock is doing fully. This is just an idea on what potentially can be happening, because anything can still happen before market opens, right? So you can use that pre-market 24-hour overnight movement to kind of get an idea of what may have occurred over the weekend or overnight to see what's going on. So futures open at 8 p.m. on Sunday, 8 p.m. Eastern on Sunday. So futures come out, you can normally see if there was a gap up or gap down over the weekend. So from Saturday, Sunday, 8 p.m. Eastern, then you'll see if there's any change or difference. That doesn't mean Monday at 9:30, that's where the market's going to be. It's just like how we have news at 8:30 a.m. and different things like that. News at 4:20 a.m. So things can still affect the market before it actually opens at 9:30, where we can trade options. But Tessie is something that has been on a crazy downtrend over and over back to back recently. So I definitely sooner or later we got to see a reversal where people start seeing that price on sale or a discount. But I would say wait a little bit if you're going to buy some long-term trades, but trade day by day. So look at price action pre-market and as market opens. Some people are saying, Niiko, what are you going to jump into Action Monday at 8:30? To be honest, I'm waiting until 9:31, 9:32, 9:33 to see how price is doing and what news has come out up until that time. Right? So understanding news can happen at any time, price change can happen just as quickly. But I would say just wait, play it by the day, play it until and see what we get day by day. News is going to come out, but actually I think we have delivery numbers coming soon as well on Tesla. I gotta check and see what day. And that delivery.
Good night.
You heard me? So that's a catalyst that can affect the stock and of course affect the premiums as well. If it's expected, you know that price will increase. But any questions, guys? So pack week, earnings coming up, and definitely be prepared for a crazy earnings week. Nvidia's can make or break the chip sector and a lot of the market as well. So just watch as the market's moving. And we got Wednesday into Thursday, Thursday into Friday, news going on that can definitely move the market. So just be careful, y'all. I'm about to wrap it up here. Y'all have a wonderful and blessed night. We back at it tomorrow morning. Y'all be ready.
For sure, brother.
That's
All right,
all.
brother.
Yeah. Good night.
Yeah.
In a
Thank
minute.
you.
No problem, guys.